Myself Lavanya, working as an assistant professor, Department of Commerce and Ratnam College of Arts and Science. So good afternoon. I am here with the topic, I am here with the subject financial accounting. So in financial accounting, we are going to discuss about what are all the meaning and what are all the objectives and functions of financial accounting. So first one is meaning of accounting. So what does mean by accounting? So accounting is a one which records all the transactions which appears on the bank or a business or an entity. So accounting is the process of recording the financial transactions, and also in the business, the accounting process includes summarizing, reporting, analyzing, and all the reports should be submitted to the respective entities. Next. So accounting is considered as two types. So one is bookkeeping, another one is auditing. So bookkeeping is nothing but it records all the transactions which occurs in the business entity. So next one is accounting is an art of recording all the transactions of a business and knowing the results of carrying out the business entity. Whatever the transactions which are appeared in the business means that will be recorded under the business transactions, and also it is called as an accounting. So in that there are two types of perspectives. So one is historical and another one is modern perspective. So what is meant by historical perspective? So historians claim that accounting was introduced thousands of years ago using clay tokens to keep records of crops and livestock. So historians, so historian means before the modern time, the peoples who are under the accounting field, they have used historical perspective. So under the control of clay tokens. So that is also one of the method to keep the records of the business transactions. So in modern perspective, we are living in modern area means we are using the modern perspective. So in the art of recording, classifying and summarizing in a significant manner and in the terms of money. Whatever the transactions which represents the money means that will come under the modern perspective. So next one is fields in accounting. So what are all the fields? There are 5 types of fields. So first one is mathematics, and second one is analysis and forecasting, third one is communication, fourth one is computer and IT, and last one is finance. So mathematics is nothing but which comes under the accounting, and also it represents the numbers, and it also represents the calculations. So that is known as mathematics, which is the first and important of fields in the accounting. And the second one is analysis and forecasting. So whenever we are doing the transactions, that transaction should be analyzed and it should be forecasted by the particular person or particular entity. And next one is communication. So communication is nothing but between one person and another, there should be a proper communication about all the business transactions. And next one is computer and IT. So not only for the accounting persons or not only for the business persons, for computer fields and IT fields, for them also accounting is helpful for them. And last one is finance. So without finance, the business cannot run. So the transactions in the business should be recorded under the finance field. So that is, these are all the 5 types of fields in accounting. And next one, what to learn. So in accounting, what are all we are going to learn? So first one is accounting principles. So what are all the principles which should we follow by the accounting? And second one is basic accounting concepts. So what are all the concepts which we are going to follow, that concepts. And third one is accounting terminologies, accounting exercise and practices, modern accounting trends, and importance and benefits of accounting. So whatever the transactions which we record, from that we have to get the benefits. Next, process of accounting. So there are 5 steps of process. First one is identification of business transactions. So for example, Mr. A is going to start one business. So whatever the transactions he is going to do, that should be identified first. And next one is making of vouchers. For every purchase and for every sales, he have to make or he have to create a voucher for future benefits. And third one is recording of transactions in a day book. So day book is called as a ledger. In that ledger, he have to record all the day-to-day transactions. And next one is posting in ledger. After recording the day transactions in the day book, he have to record all these transactions and all these records in the ledger. And next one is preparation of trial balance and financial statement. At last, the transactions is over means we have to create a financial statement. So for 1 year, what is the profit or what is the loss which we have faced in the last 1 year. So that is known as financial statement. So accounting. So in accounting there are different types of accounts, but the most important 3 types of accounts is financial accounting, management accounting and cost accounting. So first one is financial accounting. So financial accounting refers to the process used to generate interim and annual financial statements. So financial accounting is nothing but, if for example, if the businessman is going to start a business or going to start an entity, he have to create the business transactions before starting the business. That is known as financial statements. And the next, the results of all the financial transactions that occur during the accounting period are summarized into the balance sheet, income statement and cash flow statement. So under the financial accounting there are 3 types of statements. One is balance sheet, second one is income statement, and third one is cash flow statement. So under balance sheet there are 2 types of terms. One is liabilities and another one is assets. So liabilities is nothing but the debt which we have used in the business, and asset is nothing but it is in golden opportunities or golden words which we are going to use in asset. So that is known as balance sheet. So income statement is nothing but we have divided into 2. One is profit, another one is loss, and the last one is cash flow statement, whether the cash are incurred or cash is going outside. That is known as cash flow statement. Next, managerial accounting, that is known as management. So this particular accounting is only used in the organizations or the management, that is the specialization of this management accounting. So this uses much of the same data as financial accounting, but it organizes and utilizes information in different ways. Not only it follows the financial accounting prospects, but it also which reflects to the management and also for the organization. And the last one is cost accounting. So just as managerial accounting helps businesses make decisions about management, cost accounting helps businesses make decisions about the costing. So what the cost accounting do in the accounting means, this cost accounting is only helpful for the industries to help the laborers to calculate the cost. So for example, if one person is going to purchase a raw materials from another person, means how much of raw materials has been purchased by that person, that cost will be calculated under the cost accounting. Essentially, cost accounting considers all the costs related to producing the product. For the particular product, how much of cost is going to be appeared. So that is known as cost accounting. Objectives of accounting. So the next topic we are going to discuss is objectives. So to maintain full and systematic records of business transaction, the first and foremost and important objective of the accounting is maintaining all the business transactions which we are going to do in our business. So that is the first objective. So accounting is the language of business transactions. So given the limitations of human memory, the main objective of accounting is to maintain a full and systematic record of all the business transactions. For example, one person is going to do a business. So for that business, he had spent about 10 lakhs. So for the 10 lakhs, what are all the transactions which he have done? So that is known as transaction. So that transaction should be recorded in a systematic manner. Next, to ascertain profit or loss of the business. So the main motive for starting a business is we have to ascertain a profit or we have to ascertain a loss. So the business is run to earn profits. The only motive to start a business is we have to earn a profit. So whether the business earned profit or incurred loss is ascertained by accounting by preparing profit and loss account or income statement. So comparison of income and expenditure gives either profit or loss. So either it may be a loss, either it may be or profit. So if we are lucky, we can attain a profit in the manner. So this is known as to ascertain a profit or loss in the business. Next, to provide accounting information to the interested parties. So we have to provide the accounting information to the interested parties who are willing to invest their money in our business. For example, Mr. A started a business. So Mr. X is coming to Mr. A's capital, and he is investing some amount. Means for that Mr. A is asked to inform all the regulations, rules and regulations about that company, and he have to submit the all business transactions. So that is the main important thing. So there are bankers. So bankers can invest some money into the companies, creditors, tax authorities, prospective investors, researchers, etc. All these types of persons can invest some money in other companies. So hence, one of the objectives of accounting is to make the accounting information available to the interested parties. Those persons who are ready to invest in our company, means we have to provide the information to them. Next, functions of accounting. So previously we saw what are all the objectives, the functions. Next one is functions. Functions. The functions of accounting includes the systematic recording of data and tracking, storing, analyzing, summarizing and reporting an entity's financial transactions. So the first function is summarizing. So whatever the transactions which we have done in a 1 year, that should be summarized. And second one is analyzing. So all the data should be analyzed by us. And third one is reporting. We have to report to the particular entity. For example, Mr. A, he as an entity, means we have to report that kind of transactions to Mr. A. So that is known as reporting. And next one is, through the functions of the accounting department, the entity can maintain a history of financial data, which is also utilized for the audit purpose. So for every company and for every business, there will be an audit team. So that audit team will be under the control of the management accounting. Next. So to keep the financial records. So accounting helps to maintain all the financial records under the control of the business persons. So that is why financial accounting is helpful for the purchaseman, salesman, and also for the salesperson, and also for the customers who are belonging to under the financial persons. Thank you.